recording. So anybody that pops, if you could just
See it,
go
submit.
browse that.
Okay.
And then let me know, and then I'll come and stop from time to time to see.
Okay, thank you. That I'm not crying. Hi, David. Okay, is Brooke on? I know Brooke. Yep. Okay. Bill. Okay, I think we have all of us, Mike. The committee.
Yeah, maybe I should just kick this off. So we just wanted to have a call with Tim and Meredith. Thanks for joining us both. There's been a few emails going back and forth by some of the owners and some questions, and we thought it'd be best to just ask you guys what those your feedback on that and the way forward on some of the things we're looking at. So
Well, why don't you guys just kind of address it or give me the questions as you understand them, and Meredith and I will do our best to give you an insurance perspective on those questions.
sure. And so I assume you haven't Scott hasn't provided you any input at this point?
Oh, no, Scott did send an email.
Okay.
Email chain, and if you want, I mean, I think there was some people that some unit owners. Okay, how about this? How about if I tell you what I think I understand and you tell me if I'm off base? How about that?
Okay, so Brooke, I think you have quite a insight in this area. So let Tim summarize what he understands, and then Brooke, you can add to that or clarify it.
Okay, I sent in the written inquiry. It might just be better if I just start, if you're willing to let me go with it, Mike. But I'm
Okay,
flexible.
we can do that as well. Tim, what's better for you?
Doesn't matter to me, and we're just here. We're here
Okay, so
So Tim, when we passed, we had a board meeting probably 6-8 weeks ago, and I had pushed back a little bit against this policy, and it's more based on to let you know, for 20 years I've worked with FEMA in a variety of roles, and so I've literally seen probably worked with 300 different entities, mainly public governmental things, trying to get back on their feet. And it's literally probably been over 300. And I've worked hand in hand with the insurance group at FEMA, which is pretty sophisticated. And I've just seen the problems people have at disasters. And so the first thing I want to emphasize to other homeowners who may not be listening to this or is familiar is we have a huge storm surge risk, but the good thing is the NFIP policy has a deductible of around $2,000. So if we have a damage by a storm surge coming in, or whatever you want to call it, a flood, we're pretty well covered on the deductible side, and I don't see us using this glass policy for that because probably we'll blow through the 2,000 on carpets. So with the wind policy that we have for 74 miles per hour winds and a $25,000 deductible, you probably wouldn't spend $18,000 a year to avoid a $25,000 deductible. I think we're probably all on the same page there.
What? Brooke, can you clarify which wind policy you're talking about with a $25,000 deductible?
Yes, our as I understand it, and Tim can correct me if I'm wrong, but our master wind policy, or whatever they call it these days, our general cut liability policy, is probably broader than wind. It has a $25,000 deductible until we hit that magic number of 74 miles per hour sustained for a minute or 3 minutes.
What you're referring to is an all other wind deductible. Okay.
Right.
So if there was a tornado that just popped through, did damage, the 5% hurricane deductible would not apply. Okay. If it was just a tropical storm that was 65 miles an hour, like what they're having right now in the Gulf, okay, the $25,000 deductible would apply, not the 5% of the $130 million.
Right. So we all agree there, and I think most human beings would say, hey, if I have a $25,000 deductible, and it's a very rare event, because I think we've had this policy for a couple of years now and haven't put a claim against it, they wouldn't say we're going to pay $18,000 a year, $18,000 a year to avoid a $25,000 deductible. So the way I see this glass plan is it's for those events where we're getting a hurricane above 74 miles per hour.
I actually see it just the opposite, Brooke. This glass policy has, I think, $1,000 deductible. And
I think it's $0 supposedly.
okay, look, okay, zero deductible, and it covers where I've seen it used most is our when I try to present it. Like in your case, I'm going to use a good easy number of $100 million with a 5% deductible. With a 5% deductible, that means you have to for that policy to pay anything, you have to have $5 million in losses. Okay, so what this policy affords to, and I don't disagree with your assessment that, hey, I don't think there's a right or wrong answer. Some people like to have it, some people don't like to have it. We had a big debate several years ago, and they decided to take it. Okay, it is this is for things that just happen. If we have a Cat 1, Cat 2 storm that we don't exceed our deductible, but we lose, $100,000 of glass, okay? Then it has a $0 deductible. The beauty of this policy is it is an all perils policy, meaning if anything happens to that glass, if I was standing out front with someone and we were just throwing a baseball back and forth and I missed it and it hit a glass and broke it or spidered it, they would come and replace it. Okay, so it's an all perils deductible. But many people, Brooke, I think share the same sentiments that you have that, hey, it's, it's a waste. I'm not going to say a waste of money. It's something that couldn't be used. So,
but Tim, to your point though, is if you're paying $18,000 a year, you're presuming that you're going to have some event during those 12 months that's going to exceed 18,000 of glass, and that's a lot of glass to break.
Well, I'll disagree with you. We're paying hundreds of $1,000s, and it's, to me, it's protection. I'm not I hope we never have a claim.
Oh no, I agree. It's just I don't see the case where we would have over $18,000 of broken glass in an event that's less than 74 miles per hour.
I don't disagree with you, but I think that there could be, and you maybe have had experiences back, and it may be as back as 04 and 05, that where you had claims that did not. I think the main benefit of this policy is for those claims under the deductible, under the 5 million, where you have $1 million.
But isn't, as I say, and I guess this is where I'm confused, is if the wind is less than 74 miles per hour, let's say the baseball thing, isn't our deductible only 25,000?
Are you talking about a glass thing?
Yeah, because I thought you said that for when the wind is less than 74 miles per hour, our deductible under the all perils, the big plan, is only $25,000.
You're talking about two separate policies, okay? For the wind policy, for it to kick in, we have a tornado that comes through and it causes $200,000 of damage, okay? 100,000 of that's glass. We would file a claim under the glass policy, which has zero deductible. You would pay $1,000 on that.
Well, but the first thing the primary insurance company is going to be the big policy, right? With the $25,000 deductible, so they're going to pay from, let's say, going to your example, 200,000 of damage, winds are less than 74 miles per hour. The big plan pays for 200,000 less the $25,000 deductible, right?
Correct, but then you can.
And then the glass plan's only going to pay the $25,000.
Yes, I would agree with that.
And
Okay.
so we're paying essentially $18,000 a year to cover that delta between 19,000 and 25,000 for each year for the 74 mile per hour less. And I think that I just know that myself, I would say, hey, in 2 years with no claims, I'm ahead of having this policy for the 74 mile per hour wind case.
And I cannot disagree with your theory.
Okay. And the other thing with the plan is when Meredith sent an email back and forth with Scott, she said that in the case of the baseball bat, the glass policy is going to pay for it, but then they're going to subrogate against the homeowner who hit the glass. And so all of a sudden, we as the PDS is going to be partially involved in this subrogation litigation. But let's move beyond that. So we all agree that in the 74 mile per hour case or less, it's highly debatable whether people would do it. So our big ask, so the big case we're using it is when, and I've done the math, Tim, based on our building replacement value, then when the winds hit above 74,000, well, let me ask you this question, because this came up when the board passed it, Tim. Was one of the board members, Todd Brown, said, what is our as I understood him, he said, does our insurance agent recommend this plan? So I guess my other question is, how long have you been our insurance agency?
Many years.
Okay.
For 300 years.
So it seems to me like for up until Joanne came to town, our former building manager, Joanne Lowenthal, for many years you were not recommending this glass plan.
We would offer an optional quote.
Right.
And Brooke, let me finish. It's just like an umbrella. For years, you only carried a $25 million umbrella, okay? We offered you a $50 and $100 million option. Is to say I don't recommend it. I can see the thought path that you have that, hey, it's wasted money. But I want to go back to something else you said that Meredith said, and I want to clarify that, okay? Meredith, I don't think that the glass policy would go back and subrogate against the homeowner.
Okay, well, in her example, she said that if the construction company were to break glass, the policy probably wouldn't pay the construction company because they'd expect the construction company. And quite frankly, we have insurance up the blah, blah, blah for that situation. She said, but if a window washer were to break the glass, that they would subrogate against the window washer, which to me seemed analogous to the baseball bat. But that's a minor point, Tim.
That's a totally different example of what we wouldn't go back against the unit owner. If you guys have a vendor that you collect certificates of insurance on, and if they cause damage, you should not want your insurance company to pay the claim. You should want their insurance company to pay it because that counts against you.
Okay. Can I ask you a broader question, Tim? What percentage of your clients in similar high-rise buildings like us do you think have this plan?
I would say of my beachfront properties, of let's say 50 to 75 beachfront properties, I would say about half of them have the glass policy.
Okay. Because I think, as I say, when the question at the board meeting came up, and the question was, did the agent recommend it? I think that having a little bit more visibility to say, hey, the agent offers it, and about half of his clients in similar situations take it, would have been a little. But again, I appreciate this information. So my other question is that, as I understand the glass plan, it covers a lot of the glass on the lobby level, which I believe is mainly susceptible to storm surge, because a lot of our exterior glass, like our oceanfront exterior glass, it's hurricane rated, and then we have shutters in front of it again. So it's fairly well protected from a wind event on the ocean on the lobby level. It's probably the storm surge event that's going to get it. And the glass policy, as I say, is probably not going to come into effect with the 1980 deductible or whatever we have with storm surge. So I guess the other question I have is it covers our what we call our catwalk balcony glass railings. And I'm sorry, something weird happened on my computer. But we also have a similar glass railing that was installed at the same time with, basically, as I understand it, we have the catwalk, or they call them the breezeway glass, and we have balcony glass as well, glass railings that are all the same. My thinking is that, again, if you buy my logic, that this plan really kicks in above 74 miles per hour wind when we have a loss that exceeds our 25, that the loss is going to be significantly more than the $18,000 a year we're paying for the plan. Because you wouldn't buy an $18,000 plan if you thought you mainly were going to have less than $18,000 of damage each year. So my thinking is that if we're going to have $20,000 of damage on our catwalk glass balconies, that we would probably have a significant amount of broken glass on our balconies. So what's your thinking or what was the thinking that we would protect the catwalk glass, but we would expose ourselves to this similar glass and we'd be willing to pay for it out and out?
What similar glass are you referring to?
The balcony glasses. So we have, again, as I understand it, the HOA PDS is responsible for the glass railing on my balcony, okay? It's the same glass railing that we have on the breezeway catwalks, based on my review of our building documents, our construction documents from 2013 or so when this was installed. And so it just surprises me, because I would think that if let's use an example. We get $50,000 of catwalk glass that's broken, and the $0 deductible kicks in and it pays for 50 grand, right? Mm-hmm. It seems to me that, and if you read our hurricane plan says that the higher in the building you go, the higher the wind speeds during any event, right? So we protect the catwalk glass railings on floors 1 to 16, right? Then we have balcony glass railing, the same glass, going from floors 1 to 28 that isn't covered by this glass policy. So in my language, we're self-insuring for that deductible, right? Mm-hmm. So I guess my question is, and I'm on the 28th floor and I have this glass railing. Our family used to have 709, which was on the catwalk side, which is why I'm familiar with that as well. So I would just think that if we have this event where we lose $50,000 of catwalk glass, that we would probably lose more. And to give you a relative perspective, our reserve study says the value of the catwalk glass, and it includes the frame of the glass, so it's not just the glass, but it's the best measure I have at this point, is valued at $600,000. The balcony glass, which is the same glass system, is valued at $1.2 million. So it seems to me that if we had $50,000 on the catwalk glass of damage in an event, that we'd probably have a similar level of glass failure on the balcony glass. So it just surprises me that we want to be protected from the $50,000 and then self-insure, pay out of pocket for all the balcony glass railing. So I'm just trying to understand that from a risk management perspective.
Okay, Meredith, go ahead. You're muted, Meredith. We can't hear you.
I'm not muted. My microphone just doesn't
Now we can
work.
hear you.
Okay. When we originally offered this policy in 2022, we offered the balcony glass as well. It was, I have it up here. It was $42,722 in premium for the balcony glass. And then it was decided on by the board to stick with the common area glass. So it's not one's right and one's wrong. That was just the decision that
It
was
was
made
money.
in 22. Yeah.
But from my perspective, is that a $42,000 bump, or was it like the glass? I think the glass policy back then was like 15,000. So was it 15,000 to do the catwalk, then an extra 45 to add the?
Meredith, you have to get a lot closer to your microphone. We can barely hear you.
It was in addition to the primary glass. I'm so sorry. I'll get my computer fixed.
No, that's fine, Meredith. That's fine. I love all human beings. I'm sorry that I guess maybe it was my time working on Hurricane Sandy in New York that I've gotten to be a little bit more aggressive on the calls versus in Louisiana when I was a little bit more friendly with the Katrina folks. So from my perspective, it sounds like we have a $600,000 valued system, and the insurance company said that's going to be $15,000 in annual premiums, right? Then we have 1.2 million, which is about 2 to 3 times as more, and they say, hey, it's going to be 40. So it sounds to me like as far as the cost per unit of coverage is pretty similar between the two quotes. In other words, they're saying that it's going to cost you that if it's going to cost you 80 cents per unit on the catwalk side, it's similar to 80 cents on the balcony glass side. So I have additional information that you don't have, but the last time we had an event that damaged a lot of glass, people are telling me that it appeared that the glass damage was coming from roof systems, in fact, our own roof system, deteriorating. And when I look north on my 28th floor, and most of the buildings are like 14 stories, looking north from my unit right now, I see tons of old roof with aggregate on them. And it just seems to me that from a hazard perspective, I'm seeing all this, and again, it's based on my discussion of where we had glass damage in past events, was that it was coming from this roof. So I would suspect that in a hurricane event, that these balcony glass, particularly like my unit and stuff, is just going to take a pounding from roof systems just falling apart to the north and south. And so that's why it just surprises me that we're protecting ourselves from this deductible on the inland side, because the catwalk glass is on the west side of the building facing the Everglades. And quite frankly, there aren't a ton of high rises and stuff to the west of us. There are some, but not nearly the density north and south. So it just surprises me that the glass we're protecting isn't the north, south, and ocean facing, that it's the wetland Everglades facing glass that we're protecting. And that's just what surprises me.
Brooke, let me try to see if I can summarize what I think you're saying. Is number one, you question whether we should even have the glass policy at all. Okay?
I would self-insure.
Yeah, okay, but that's number one. You question of whether to spend anything for the glass policy.
Right.
Number two, if we're gonna take the glass policy, then we should insure the whole thing, buy the other $45,000 and insure the more, in what you've described, the more exposed side, which it seems the rate is comparable, as you pointed out. So you think, hey, we're buying one policy, but we're not protecting this $1.2 million of balcony glass, which is the most exposed side. So if we're going to buy glass, should we buy glass? That's the first question, number one. Number two, if we're going to buy it, then why aren't we buying the full amount? Is that what you're saying?
Well, those are two of my concerns, Tim. To be honest, the biggest concern I had that I brought when I did my are you familiar with, anyways, I did a written inquiry to the condo association, but my bigger questions is just that I just want to make sure we understand what we're getting. And it wasn't clear to me that when we had this probably 80 seconds of discussion at the board meeting, because I'm only allowed 3 minutes to speak. And I used my 3 minutes to talk about the flood plan and the contents, and we've bumped our insurance up to cover the contents, which I think was a smart move. And it wasn't that costly. So I'm not opposed to getting secondary insurance or whatever you want to call them.
Brooke,
But as I say, I just don't think, I think a lot of people heard $0 deductible for glass and didn't know what it meant. But what really concerns me with the policy is that it has this clause that says we exclude all glass in buildings that are under construction or renovation. And I'm not an attorney, but when I did take some law school classes, they discussed the four corners of the document. And when I look at the four corners of the document, it sounds to me like that they write within the four corners, they say we exclude all glass in buildings that are, I don't have the exact language in front of me right now. It would take me like a second or two to get it. But it says,
just a second. I want to touch upon those 2 points that you just spoke about, and because I'm trying to understand those two first points regarding the glass, because we seem to like gloss over and then move on to other matters. What I want to know is like the glass on the balcony side, is it covered by individual homeowners, or is it covered by the building? The building owns it, and if so, then maybe Brooke has a point, and we need to understand, like, just you guys will give us the menu and figure out how much will this cost, how much will this cost, and then Brooke has a valid point here. And then the second question I have that actually I'm really wondering about is, all this is nice, but when the building needs to file a reimbursement for something that is done, how long does it take? How long does the process take? Is it like an overnight? Is it like a month? Is it like a year? What are we talking?
Can I ask Tim something?
Just a second. Leslie, I just wanted, just look at that. One answer.
Questions.
I'm in the middle of a hallway of a hospital, so they're giving a spiritual message right now. I apologize.
All right. And so did you hear the question?
No, I actually tried to mute myself.
Oh, so maybe Meredith actually heard me.
I heard point one, I didn't hear point two. Go ahead.
Meredith, did you hear?
I did, yeah. I'm sorry I'm so close to my camera again. So in the event that you were discussing where the balcony glass is the property of the association. So the association is responsible for replacing with like, kind, and quality. If you in particular have upgraded to impact glass, the property policy is not going to pay for the upgrade. So the property, okay, say a regular glass panel's $100, impact glass is $500, just to make it easy. They will pay the $100, and the unit owner will be responsible for insuring or paying for the $400.
That's called improvements and betterments.
Okay, and then once we file for reimbursement, how long does it take?
They're quick. Are you referring to the glass policy or the wind policy?
I'm referring to catastrophic event, emergency, like something happened. How long do we get to see the money as an association before we can actually?
Well, the glass policy, my experience is the glass policy is relatively quick. Okay, it's because it's very easy to assess the glass that's been broken. Okay.
Okay, so glass, yes, but half a building fell over because of a hurricane. Then how long does that take? Is that like months, years?
No, well, to better answer your question, if we had a catastrophic loss exceeded 5% of the, let's say we had $25 million in damages, just getting the assessment on your end and on the insurance company's end of how much that loss is, that's what takes the longest bit of time. everybody can recognize and see that you've had a claim, but how much should be paid, okay? And in an insurance policy, Brooke was right. I mean, it's a legal contract. The bilateral contract that has an offer and an acceptance. And
Fair enough. I understand. I appreciate it. It basically means it takes time. I
Hey,
appreciate it.
I think Meredith is.
Thank you very much, everybody, because I sort of have to run to another meeting, but I appreciate it. Thank you very much, everybody.
Meredith, I think actually the HOA would have to pick up the upgrade for the extra glass on the glass railings. Our reserve study identifies that as an HOA responsibility. And when the glass railings, so as I understand it, we used to have like a CMU block railing system out there. And then in 2013, the HOA paid for the catwalks to become glass railings, and the HOA paid for the balcony glass railings to become glass railings.
I think that would refer more to your documents.
Right. So as I say, but according to the reserve study, that's an HOA responsibility. So that just, but I was going to say, I guess David
I'm going to throw a caveat into everything that's been said so far. Okay, the glass can be covered under two separate policies. If you have a glass policy, it's going to pay for the glass. Okay, let's assume that you don't have a glass policy. Well, is our windows and our balconies covered? Yes, they're covered. They're covered under the property policy, under a covered peril under the property policy. And in this case, let's call it wind. We have a wind event. You're 100% insured. You're insured to, and I don't have the numbers, plus 120 million.
Yep.
It's based on an appraisal. Okay. The only caveat to that, guys, is you have a 5% deductible. So you're fully insured, but the insurance company doesn't pay a penny until you have met your deductible. That in essence is why a lot of people, I'm not saying they're right or wrong, buy the glass policy for events under the deductible. That is under the big deductible, not the AOP, because all other wind, because Brooke, that 25,000 all other wind deductible that you have this year was 100,000 earlier, and that's come down. I mean, in the past, when the market got really hard, that AOP that all other wind deductible was actually higher. So,
well, and that's why I think it's a good discussion now that that's dropped, is because that's a big change from that the 74 mile per hour less situation is now only 25 grand versus 100 grand. But again, my bigger concern, well, Heskey had a question, so we should go to Heskey's question because he's the chair. Excuse me, he's not the chair, he's a board member.
Meredith and Tim. So as a practical issue, when we do sustain window damage, do we call our own vendors, spend the money, and come back to you for reimbursement? Or
No.
do you guys, does this insurance company have its own vendors and they will immediately send us contractors to replace the glass without us having to stand in line behind 50 other condo buildings trying to reach out to glass vendors? So does that put us ahead of the line, sort of?
on the glass policies, just like other policies, you have to report the claim to the insurance company. The insurance company at that point will inspect it. They'll send an adjuster out. And in the case of the glass policy, they will have vendors lined up to fix the glass. Did I answer your question?
So, yeah, I mean, from my point of view, that's worth everything.
That's a
because
plus.
when we do have a hurricane or a big loss, forget it. There's not going to be any glass. There's not going to be any plywood. No vendors are going to pick up the phone. You're not going to be able to reach anybody. You're just going to be left out in the cold. So if we do have an advantage by having vendors, through the insurance company that are going to come through, then that's the peace of mind that we're paying for, not the dollars and cents that we're saving here. Or if we go to self-insured, we were taking a chance. And, Brooke, self-insurance would be fine if it's just your apartment and your property that you're talking about. But I mean,
No, Husky, you're misunderstanding me. What I'm saying is that self-insurance versus the glass plan. I'm not suggesting we get rid of
no,
our
with
big.
the glass plan too. I mean, we do have a fiduciary responsibility to everybody to trying to go out on the limb and self-insure and saying, oh, well,
It was a
don't
poor
need
choice of
insurance.
words. I just, again, but Husky, that was my question, is why are we willing to say, hey, we're going to take care of it ourselves for the balcony glass, which seems like it has a greater exposure to risk than the catwalk
Well,
glass?
because the balcony glass is not egress. The catwalk glass, they're trying to protect the egress. They're trying to protect the egress in and out of the building. The
Well,
balcony
here-
glass is just,
But here, Husky,
it's a
I-
limited common area that has no impact on the safety, of the building.
But Husky, what I was going to get at is that here's the thing, is when I look at the four corners of the document, and again, Tim brought up that it's kind of like a legal contract, etc., right? Is, again, they have this clause that clearly, they say other exclusions, right? And it says, and I wish there was a way I could share my screen right now, but I'm not sure if Barbara knows how to allow me to. But-
What page is it on, Brooke? Because most of us have the policy. What page?
Okay, well, if you have the policy, I can give you the exact call out.
Yep.
And it's I believe it's 3G, but don't have it in my brain. Must not be operating my computer efficiently right now.
Let me give you some input on that, Brooke. This is a standard policy and it's a standard exclusion. And the purpose of this is if we've got contractors working at the building, they don't want to pay a claim when a contractor drops something and causes damage. They don't want to pay for someone else's damage. Okay? If it was an event that happened, a hurricane, I assure you that the glass policy would step in and pay. Okay?
Well, as I say, all I'm saying, and this is why I wanted to have the conversation, Tim,
Yes, sir.
is because, again, when I read it, it's under section 3.C, section C, point 3, point G, other exclusions. And it says all glass in buildings or sublocations under construction are excluded. And so when I look at the fact that we have had major construction operations for the last 2 years, we had at any given time when I'd visit the unit, the building, we would have swing stage all over the place. We had carousel construction all over the place. Right now we have a hoist going from floor 28 to like floor 17. Then we have another hoist going from floor 17 to floor 1. We have all the parking spaces in front of the common glass windows on the lobby level have roofing materials in front of them. And again, when we asked the question to Meredith, she said, well, it's going to depend on the causality as I read it, because she said, if the contractor breaks the glass, if the window washers break the glass, well, when we have an event over 74 miles per hour, nobody's going to be around to know what caused the glass damage.
Hey,
And
bro,
again, when I read the
how about this? How about I think I can help you here. I think I understand your question because you read it, and I'm not saying you're reading it incorrectly. You're reading it black and white, and that's the way you should read it. How about if we ask the insurance company to put in writing to us?
Well, that's what I asked in my written inquiry. I wrote a written inquiry to the board under Florida law. You're allowed to write a written inquiry. And my specific question in my written inquiry was, did we have something in writing? Because there's also another condition in there that says that within 30 days of starting a project or an alteration to the building, we have to give them notice. And as I say, we have tons and tons of overlapping construction here right now. We have the roofing contractor, we have the fire sprinklers, we have all this overlapping, and they have a bold sub-definition that says subpart. So the way I read that, if they say that a subpart is an apartment, So they say if the building is under construction or renovation, or a subpart of the building is under construction or renovation, that they're going to, that the exclusion is there within the four corners. The other thing that goes to Heskey's point is that one of the things that when I read all the ifs, ands, or buts in this policy, it says that they have the option to send a contractor, or they have the option to not send a contractor and put the responsibility to us to find the contractor. So my question, and again, this is an internal thing with Playa del Sol, and they also have exclusions that you can't touch any of the broken glass and stuff. And I just want to make sure that if we have this policy, that our building manager and our maintenance folks know their responsibilities under the four corners of this policy so that we do it right. And as I say, they say that they have the choice, and I just wonder to myself, I know that during one of the last recent disasters that happened, I heard all sorts of people on the news, ABC News or whatever, saying how they couldn't get through to the 800 number for State Farm. And I know that all these companies are reducing the number of humans and they're going to AI. And so according to this policy, we have to call this 800 number. And I was thinking to myself that if the main purpose of this insurance plan is during a big event when there's tons of damage, and I'm thinking to myself, if we can't get through to this 800 number, then we have the situation that we get through to the 800 number, and assuming we've done all the things right, where we haven't touched any of the glass or done this work ourselves, and so as Heskey says, it's an egress thing, and let's say it takes us 2 weeks to get through the 800 numbers, so for 2 weeks we don't have egress, then we call them and they say, hey, we don't have contractors right now, so we're going to delegate that responsibility to you, which is what the plan says they have the option to do, then we're sort of out of luck. Plus, if we only do the balcony glass, if we do if we're going to do the catwalk glass, but not the balcony glass, then we have the situation where we're going to have to find a contractor to do the balcony glass. We're going to have this other contractor, which may or may not meet our insurance requirements, and I don't know if the building is going to be willing to just waive the insurance requirements for the glass policy and just figure that they're insured enough through the glass policy, which would be reasonable. But again, and then we have the other thing, Tim, that I found out is we have, again, this is an internal PDS thing, but our documentation, when we installed this glass, right, which as I understand it needs to be engineered because on the 28th floor they don't want a human being like me falling off. We don't appear to have any of our engineering calculations, but we do have a letter that says, hey, the building code has changed and the new building code requires laminated glass in the balcony and the glass railing systems, catwalk or balcony. But they said that since we got our permit application in under the deadline, we can go ahead and use the safety glass or whatever we want, the human impact rated glass. So it just seems to me that if we have over $25,000 of glass damage, my suspicion is that the building department may require us to upgrade to a code that has now been in force for over a decade. And so we may find ourselves having a lot of conversations with this glass policy and then we have another letter in our file that says that it's important to, and again, I'm still trying to figure this out, Tim, but the way I read this letter is they say that if we do laminated glass, the gasketing system that holds the glass in needs to be a different type of gasketing system. So it makes me wonder if we would be able to even put in under our current system the thing. And again, the other thing that this glass policy excludes is it excludes permitting, it excludes engineering. So again, if we're going to have like $18,000 of glass damage, I suspect we would need to pull a permit for that and have some level of engineer. I could be wrong, but I'm just saying is that it doesn't seem like it is comprehensive as we may think it, because it has like a $250 limit for boarding up the openings. And I'm just saying is that when I read the policy, there's a lot of, it's just not as, there's a lot of nuance in this policy administratively that I'm not sure the association understands. And as Heskey says, there's going to be, if we have a big storm, there's going to be a lot of things that in addition to the glass balconies will probably break. And I just, and again, and that was the other thing that I was concerned about, was that the glass policy, again, when I'm reading the four corners, it said that the word, as I read the policy on page 3, Katina, I think it has in parentheses that the word impact needs to be on there. And it's a small thing, but I just want to make sure that we have all of our I's dotted and our T's crossed, because I was able to pull the glass stamp off of the glass railing on my balcony, and it's a very specific ANSI rated and has a couple of other ratings, and I just don't want us to get into the situation where we have all this damage and all of a sudden the contractor, let's say they send their contractor out, and their contractor says, hey, I can't do this because it calls for laminated glass. Or they say, hey, the call out said that it was safety glass, but you didn't call out the ANSI standards and the other standards. So that's my concern here, is when I read all these exclusions, that the no engineering fees are going to be paid, no permitting fees are going to be paid, these caveats that I just don't know that this plan, that when we go attend a board meeting and it says, hey, it's a $0 deductible plan, so it's going to cover all of this glass, that people realize all the caveats in there. And as I say, to Heskey's question, the plan clearly states that they have the option to delegate the repair responsibility to the HOA. Now, if they're willing to put in writing that says, hey, we're not going to give you all the bullshit, excuse my language, that we're not going to enforce all this language that they put in there, that they, as I say, they had their attorneys put all this language in the four corners, so when I read it, I take it seriously.
Okay, can I speak up?
I'm going to put myself on mute for the...
All right, first of all, if you guys have a claim, you're not calling some 1-800 number, you're calling my office, okay? And when you call my office, and if we lose power, we have a disaster recovery plan that my calls are going to be routed someplace else, okay? So I've got a place in Kentucky that will have cell service, or they'll have service. I have a TPA that will accept your claims, okay? So if the lines are down in Fort Lauderdale, if the phones are down in Delray, you're to call our 1-800 number. The claims will be answered, okay? That's number one. You're not calling to these 1-800 numbers report your claims. You're reporting them to me. As a matter of fact, when we have a claim and I haven't heard from you, I'm going to report a claim on your behalf to begin with. It's just a common practice I have. I can report to the insurance company that we've had a claim, and we can always withdraw the claim, because it might be that you don't know the amount of damage that you have, or you might know and you just can't get through to me. And I know this back with Hurricane I forget which one, a few years ago, I reported 10 claims in the morning. And then I was waiting then to have people to call me to report a claim. So I had 10 claims I reported before noon. That afternoon, I reported, say, another 10 claims. There was a 2-week difference in when the adjusters got there and when they didn't get there. So our practice is if we have a hurricane that hits Fort Lauderdale, whether we hear from you or not, we're going to report a claim. We're going to get you in line. Okay. To address the question on the glass policy is that they will assign somebody or not. Imagine a catastrophic hurricane. Brooke, the reason that's in there is under normal circumstances, yes, they do want to get out and do it themselves. But when there's a hurricane, every insurance company is required by the Office of Insurance Regulations to file CAT plans. You've worked with FEMA, you would know about CAT plans. We have adjusters. There's not enough adjusters in our area to handle all the claims. They'll fly adjusters in from all over the country. And that's the insurance company's obligation and requirement to have adequate adjusters, which doesn't mean if you file a claim today that they're going to be here tomorrow. Okay. But the sooner we get the claim filed, but to reiterate, the glass policy is no different than any other policy, except they do typically respond quicker. And if under normal circumstances, they can get there and do it. But if they've got 8,000 claims, my God, they don't have 8,000 adjusters. So they're going to have to outsource it. Okay. That's why we have CAT plans. Before you say anything else, I want to address the next question you had is, or I think you had, is the glass policy is a glass policy. You're right. It doesn't pay for permitting. It doesn't pay for engineering and all that. And if it's rated as tempered glass, it's going to pay for tempered glass. Okay. But the caveat for this big hurricane that you're talking about us having, if we do exceed the deductible, your property policy has ordinance of law coverage. They'll pay for that difference. Do you guys understand what I'm saying?
God help us, though.
But as long as we pay our deductible first, right?
If the like kind and quality glass is $100, is the example I think Meredith used, and when you go down to get a permit, when you've had this much damage, you have to go get a permit. Okay. You get that permit and they say, oh, you can't put that same glass back in. You have to upgrade to code because the way you described it, Brooke, you guys got in under the curtain. You got in under the curtain. So you bought the lesser amount than what the new code was going to require you to do.
Mm-hmm.
Have a coverage under your property policy called ordinance of law. It's exactly what it says. If the ordinance or the law require you to do something, then we're going to pay for that.
But that's assuming we're over the 5%, right? So we got to, so if we're at the million, say.
That's assuming the catastrophic loss that you've got a $10 million loss, not the glass policy. I think is fantastic and great for those claims that are $200,000 or $300,000. Okay, when we get into the catastrophic losses, yes, we'll still file it, we'll still collect it, and it helps meet the deductible. But then if we have to use the wind policy, is what I'll call it, the wind policy, that's where we have the ordinance of law coverage. But the glass policy does not have ordinance of law. Does not have ordinance of law.
Tim,
Yes.
can I ask a question? Is the glass policy with the same company as the wind policy? No.
No, ma'am.
So, okay.
It's
So
called,
you will, okay.
it's called plate glass. It's what US plate glass, is that the name of it?
Yes,
It's a specialty company that
it's US glass.
yes. And
So really, this policy is only beneficial if you have small claims and you don't have a major catastrophe, because once you have, from what I understand, a major catastrophe, the large insurance is pretty much going to start getting involved and kick in and start taking care of whatever is needed up to after the deductible.
You see it the way I see it. Doesn't mean that you and I are right and someone else sees it a different way is wrong. I see the main purpose or the main benefit of the glass policy is for the claims under the deductible. That's how I see it. That's how I see it. If your claim is under the big deductible, then this is something that if you have $100,000, we could have a Cat 1, Cat 2 hurricane come through, stuff is blown off of other buildings, we break X amount of glass or even impact glass, it spiders, it doesn't, and it has to be replaced. That to me is the true purpose or the main benefit of the glass policy. But like I said, about half of our beachfront clients buy it, and about half don't. I don't think there's a right or wrong. I think there's a philosophical approach.
What, do the other beachfront, do they spend as much as 50, 60,000 for the policy to insure all the glass as it would cost us if we wanted to cover the whole glass risk? Do some buildings spend as much as that to cover that?
Sandra, that's a mixed question.
Yeah.
They spend the same, they get the same rate. Your building has a higher value, so it has more, or if another building has a higher value, they spend more. I will tell you that some associations buy just common area glass policy for just the common area. Some associations buy it for the units.
In our case, it's all common area, including the units. So
yes, I would say that half, like I said, half the policy, I'd have to go back, honestly, Sandra, I'd have to go back and say how many of them do this, how many of them do that. I would say that we probably, about half our clients have the glass policy. It doesn't offend me if you decide that I'm not going to argue with you and tell you that, oh, you're making a mistake. I can see it either way. So
Well, we've already bought it.
no, you can cancel 3 months.
No, I know we can cancel it. Tim, here's my thing. Let me just do because I see Tim, and I'm glad you're here on the call because again, I thought that if we had this plan, that we were going to have to call the glass policy company. It sounds to me like you're saying you're going to take on part of that responsibility but here's based on my experience, and I was over there for in Tampa for the storms they've had in the last 3 years. I was actually in Naples where there was a lot of condo damage and stuff. I forget what the beach of Fort Myers Beach, cute little community.
Myers got the direct hit.
Right, Fort Myers Beach, beautiful community. I dealt with the city there. I dealt with a bunch of public places that FEMA did, and I drove by, and when I had to go to the bathroom, the only bathroom was at the condos under construction, so I had to kind of either be quick or be able to talk to the construction guys, right? And so I saw how those condos languished in response and stuff, and I also have seen how the buildings respond. So I think in the 74 mile per hour event, I think we're going to have at least 3 feet of storm surge, and we've had some wind vulnerability studies. So my guess is we're going to have around $2 million of damage in a 74 mile big hurricane event from flood damage on our lobby level and our garage. Okay, but we have a strong NFIP policy for that. Thank God. But in my brain, having worked as a building envelope consultant in Seattle where we didn't have much hurricanes, that if we have catwalk glass damage of around 50 grand, my guess is that the balcony glass damage is probably going to be around 40 grand. And then I have a feeling that we're going to have a bunch of glass windows or glass doors in the building that are also going to break. And so we're going to want to get a contractor in to board up the windows that have broken directly into our unit. So that's my thinking, is that and I understand Heskey's egress observation, which I think is a good observation, but my thinking is that in this large event, we're going to have broken windows that are going to the interiors, so we're going to need to hire a contractor to board up the windows. So my thinking is that if we are going to have a contractor who has enough nuance to get inside of my unit and board up a window on the 28th floor, that same contractor would probably be able to efficiently address the egress windows glasses that are also broken. And quite frankly, again, the big thing that worries me is, personally, we all make decisions. I would have made the decision back in 2012 to have brought the glass railings to the laminated code. And then my feelings on this policy would be a lot different. Because if we brought the glass railings up to the building code, so they were laminated, then it would be a very simple thing with the glass policy, because we'd have a like kind to like kind. We would have had on our glass policy, when you listed all the glass that was covered, it would have stated the ANSI coding for the code for the laminated glass, and when the glass broke, it would be a simple thing of laminated glass going to laminated glass. But I just think that it's that since we have this situation, and I think this is an internal matter that Playa del Sol needs to go investigate, is what is going to happen. Because the records that I pulled from 2012, it appears that Carousel, the general contractor, performed the work, and they hired a subcontractor. The subcontractor that installed the glass railings is no longer in business. I've made some phone calls. Anyways, I can't find them anywhere in the planet. So as I say, I think we need to get ahead of the game and try to go reach out to Carousel, see if they have the engineering calculations for the frame that holds the glass, see if they maybe have the specifications for the glass color, because we're going to have to try to get the glass color to match. And I just don't know how the homeowners are going to feel. Like, let's say we have 400 of 3,000 panels broken. I don't know how our homeowners would feel that if we have two separate glass colors. And quite frankly, we may well just say, hey, if we have 400 broken panels of 3,000, maybe we should just bite the bullet and upgrade our 13-year-old glass railing systems and bring them up to the new code. And I just think that this conversation is deeper than 5 minutes. And maybe the thing is that we keep, as I say, if we have in writing something that says, hey, we know you're doing all this construction right now, and we're going to cover, because the next 3 months are the months where this glass policy is really going to kick in for us during hurricane season. So if we can get a letter that says, hey, we're going to cover all this glass while you have all this roofing work going on in the hoist, then maybe it's worth keeping the plan. I wouldn't, but I would respect the decision to keep it. But I think that we as the building need to go do some digging. Now we have a new building engineer, as you've heard before. We have a new building manager. So I think that it would be good for Scott and Rodney to try and find out some of these issues, to reach out to Carousel and see if maybe they have the calculations from 2013. Because I just think that there's going to be that I just think that in the event that this plan becomes worthwhile, I think that there's just going to be a lot of other things. I think that there's going to be dented glass frames. I think that there may be broken glass frames, and I think that that when we can't call the people who did the original installation, we should do some of this footwork now.
So, guys, I just want to chime in here. We've scheduled an hour. I think this has been a very necessary and
Interesting.
fruitful discussion. So I thank you for Tim and Meredith and Brooke for bringing these things up. Like you say, it's going to take a few other discussions. Some of them are internal, maybe some of them are external. And we'll schedule some of these or kick off some of these maybe at a future finance committee meeting. With that, are there any last brief questions or can we
I
conclude the
have
call?
one quick question. Tim, how much is the maximum the glass policy pays?
I'm gonna let Meredith answer that. She's gonna be more. I don't have the policy in front of me.
I
Okay,
don't know that it gives an amount. I think it lists the locations covered and it's tempered glass, which is currently what's in place. I don't think that they have provided a maximum policy amount. So, right, Meredith?
Correct. I actually have an email from the underwriter confirming that. I was trying to find it. Because there was a question, I think that it only covered $250,000, but that's not accurate.
I mean, it covers what's listed, I would think, and assuming that what's listed is accurate, which is all the railings and, there's a whole list of the different items. So I'm assuming it would be tempered glass, but, and I think there's another question too. At what point does the city make you get up to code? If the damage is 20%, I mean, sometimes the trigger is 50%. So if the damage is 20% of the glass in place, can we stay with tempered? Would we want to stay with tempered? I mean, there's just different questions there, I think.
And the limit on the policy reads replacement at market cost. It's not
Right.
it's not a
okay.
Of tempered glass, of course, not what's
Yeah.
called now, which is laminated, which is probably a lot more expensive.
Katina, to answer your question, the reserve study says that the glass on the ground level is worth around 100 grand, but that also includes the frame, and that the glass and the frame on the catwalks is worth around 600,000. So I would guess that 50% of that for the cost of the glass versus the frame and the installation. So probably what it's covering is around, if you figure the 600 plus the 100 is 700,000, that's the value of that glass would probably be 350,000. And again, yeah.
Can I interrupt? Because what I'm seeing here is the balcony railings. I don't know which study you're looking at, but for the balcony railing and the one in 2024, it says the best case is 840,000, worst case $1 million.
Right, those are the balcony. If you scroll up or down a page, you're going to see the catwalk. So it's weird. And this is, again, a nuance thing, is that we call it the catwalk glass. The reserve study calls it
The walkway deck railing.
yes, they call it the walkway deck
So
railing.
that's not the catwalks?
Yes, that is. So the catwalk glass, the walkway railing, and the glass policy calls it the breezeway glass.
Oh, okay.
That's all the same glass. And so that's where the 600,000
No.
number.
In the study for the walkway deck railings, it's 840,000 to $1 million, and that's back in 2024.
Okay. So I'm
So I
sorry.
mean, we're probably getting, that's a few $100,000 more.
But I will share this, and I know that and I agree with Mike, we should end the meeting. But I will say, I share an observation that to go from 100,000 on contents to 400,000, so $300,000 of value, we paid around $2,000, right?
$1,500.
And so to ensure the glass for twice that value, let's say it's 700,000 value for the glass, right? So we're paying essentially 10 times or maybe even 15 times per dollar for the dollar spent of coverage on the contents on the glass side, which is one of the reasons why I looked at this policy and just said, hey, is this a risk we should self-insure the deductible? I just, because the other thing I did, Tim, is I do, one of the areas I do about 20% of my life is benefit cost analysis is with FEMA. And so when I look at our specific hurricane probabilities, the wind speeds, and their likelihood that this is a very low like a 100-year or 50-year event somewhere in there. I don't have the numbers in front of me. And so the other math I did is I said, okay, 15,000 a year times, 50 years and what that is, and then the value that it's giving me. And, it just, as I say, it's everybody has their own risk tolerance. But Mike, to close the meeting out, Tim, do you think you could get the letter from them just saying, hey, we're aware of these various construction activities this summer and we're willing to cover this glass while we have the roofers? Because as I say, the roofers literally have a hoist with a cable running right in front of that glass, the catwalk glass, walkway glass, breezeway glass, and it would just be nice if they could say, hey, we think that this roof activity will not influence our decision to cover it or not, because I think it might, if I were the board, if they said, hey, with this current risk profile of the roofing project going on, we're not willing to cover this, it's probably not worth us having the policy.
Brooke,
Thank
to
you.
answer your question, you've asked something that no insurance company will ever give you an absolute
True.
medical.
Well, and then I go back to the four corners of the document, and when I go to the four corners of the document, it seems clear as day to me that it says, under section 3G or whatever I quote, other exclusions, we exclude all glass in buildings or under renovation or construction. And when I ask that, when I say to myself that when a building has a construction manager, it has a bond on the construction company, and it has 5 licensed general contractors working on site this summer, because we have roof, we have sprinkler, we have fire, and when you have a construction manager, I say that your building's under construction.
Brooke, what I can tell you is from experience, okay? From experience, what I have seen, the glass policy in particular, I have seen if a contractor causes something to be damaged, then it's not going to cover it. But every association is constantly some form of
That's funny.
my experience in the past, when there has been a situation that there was a glass claim, the glass company pays for it unless it's caused by a contractor. That's just from experience. Actual claims filed, claims paid.
A more important question is, if there's a hurricane watch, what do these contractors do as soon as there's a hurricane watch?
Yeah,
How
They
do
close
they
everything
do-
up. They
Yeah,
they wrap up everything.
Right.
They
So
don't forget
that's-
it's a lot of their equipment. They don't want to see it flying everywhere.
Exactly. That's the key there. So, to prevent rather than deal with it.
an absolute, Brooke, I'm not going to lie to you. I'm not going to try to mislead you. My experience is if we have something that happens that is not caused by a contractor, they're going to cover the claim. But I can't guarantee you, and I can't promise that, and I can't go to, I've asked insurance companies, I've been in the business for 40 years, and I have run TPAs, third-party administrators, claims companies. They do not answer hypotheticals because there's always a caveat.
Yeah, Tim, Tim, and that's the difference is, and Tim, and admittedly, I ran projects with FEMA that were between 300 and 1.3 billion. And so the projects where I've had the hiccups with the insurance people are the insurance plans that, for lack of better word, went south. So my view is very tarnished, and that all I've seen are the insurance crashes. I haven't seen the window that you've seen, which has been when insurance went well, because nobody ever said, hey, Brooke, as the go-to guru of solving difficult problems, let's get you involved in an insurance situation where everything is working beautifully.
I can appreciate that.
So as I say, I've just heard when the client has had the insurance problems. And so when I read your plan, my brain goes up to all of, and let's face it, there are different quality insurances. There's a sub-market insurance. There's the folks, like my credit score is way above 800, and my mortgage world was very different than the subprime mortgage world that caused the world economy to almost crash. So, as I say, I wouldn't, based on the 50-year recurrence interval, our code issues, etc., I probably wouldn't do this plan, but as Kathy noted, it's $18,000. And what did we spend on Christmas lights? What did we spend on Christmas lights?
Well, I know what my wife spent on Christmas lights.
No, seriously, I think we spend 90 grand on, it's a crazy amount that we spend on.
You
12.
didn't spend it. It was like 10 grand, something like that.
Oh, okay. So,
But also, let me ask you this. If you happen to add this to the insurance and we happen to put a claim against, let's say the roofer or something falling, not even a storm, just something coming and breaking it, our premiums will just keep going up. So it's like it's a double-edged sword.
I'm looking at auto policies. Auto policies also separate out, the windshield coverage with the regular collision coverage. So there's some virtue to separating those two items.
Okay, well, guys, I think we've had a
Yeah.
very fruitful discussion. Obviously, it's not over. We're going to continue challenging and looking at different options, and especially in light of putting together our budget for 27, and the input has been valuable. And if we need a follow-up meeting or discussion, Tim and Meredith will
We're
we'll certainly
always
have that with you and go forward.
hey, Mike
I
and
like what
Mike,
Brooke
Tim, and
brought up.
Husky, thank you as well for setting this up. I think it's been a good thing for us to talk about.
the work.
I like what Brooke brought
All
up,
right,
by the
thanks,
way.
Tim
We
and
need to
Meredith.
end
Yes.
this.
The idea
Thank
that
you
glass
all.
is not covered on the balcony side, that I didn't know, and I didn't even know that the building is the one responsible for that. That's something we definitely need to look into.
Yeah, we'll look at it, and it's
Okay.
always, it's
What
always
we've been talking about.
risk and budget, right? So then we'll have to have a happy medium there, and the likelihood of occurrence of events. So
Well, I guess maybe we need to reconfirm that the balconies, because the association did the work, is that how it is in the declaration? I mean, I
Yes.
guess it's probably worth having another look at that and just making sure that that's in fact an association responsibility.
Yeah, the balconies are a
I'm sure
limited
it
common
is.
area.
They are,
Yes.
so, okay, so,
And I think Barbara should know that with the Sears, the whole Sears plan and everything
Mhm.
should
Yeah,
be one that
Brooke has
we'll
given
start.
us some questions, and we're not at that point yet to go back to we haven't seen the draft yet, so Brooke teed up some questions for us, and which I appreciate on this, and they were very good questions. So we've all talked about it, so I appreciate everyone. Listen, the staff is going to need this room, so we need to cut off
Okay,
the Zoom.
goodbye.
Okay,
Bye, Brooke.
bye
Thank you.
everyone.
Thank you very much,
you.
everybody.
Thanks everybody.
thank
Thank
you
you.
to everyone.